Yeah, so earlier we did talk about the flaws of the neoclassical model. So a major feature of the model is the standard assumption of profit maximization by firms. And so in that model, the changes that you see in the revenues of firms are linked to the changes in the cost of capital and labor. And that same construct has implications for competition, for efficiency, for transparency, and for innovation. And then you take it to entrepreneurial capitalism, Schumpeter's innovation theory, which explains growth in industry through three major channels: creative accumulation, creative destruction, and rejection of competitive market equilibria. I mean, these three channels underscore the evolutionary growth and endogenous innovation, with the major force behind capitalism being the innovation. And that entrepreneur who is willing to make things happen through the dynamics of markets, expectations around profit, and expectations that in the long run, the bottom line will make sense. Think about this other model, Bowley's constant wage share law. This is an important stylized fact of growth and distribution in classical political economy. And it supports the notion of a constant labor compensation share in total output. So before the changes in the patterns and processes of capital accumulation associated with the highly dynamic nature of the US economy and other countries with the capitalist mode of production, you see that Bowley's notion of wage share really made sense as a reasonable model of production and economic growth. So the changes in the patterns and processes of capital accumulation after World War II and the economic boom and the concomitant highly dynamic nature of those models would help to explain all of the issues around capitalism that we have seen, since the end of World War II. And if we bring it back to the current moment, we find that COVID-19 has perpetuated and deepened existing inequalities. So from a policy angle, we say that any practices that favor economic activity reallocation with asymmetric and distortionary impact on labor's share in total output can only worsen the existing gaps. Interventions must prevent a further erosion of the share of labor in GDP and the unintended consequences like inequality and other things. And the more I think about the capitalist system, the more I think about economic recessions and how they are often the result of global imbalances from structural and cyclical forces, which then will lead to the transmission of financial shocks to the real economy. And then you talk about things like an overheated economy, because of demand-supply imbalances. So you talk about COVID, although not caused by overheating, but it is still some form of shocks to the economy, which is external, because it was triggered by a health crisis. So it's an exogenous shock. And due to the large supply cost and pandemic-induced high-pressure economy that we have now found, the output gap is there. It lingers because everybody, policymakers around the world, they are trying to prioritize short-term interventions in order to contain the damage, and rightfully so. because redistribution is needed to smooth the shock and make sure that vulnerable populations, can at least weather the storm. And you also look at temporary shocks, which often have persistent effects. We know from both theory and empirical evidence that if the context is not right, it will be hard for interventions to not produce unintended consequences, especially in the presence of market failures and disruptions and externalities, which are all existential. This means that if the crisis is not managed well, it could produce even a more persistent crisis, what we call hysteresis effect, in economics. So essentially, we need to look at some of these issues from the lens of transaction cost, the transaction cost model, which talks about the need for regions to minimize cost by learning from the vantage point of others. After all, the progress of humanity is essentially about having lower transaction costs, which again takes us back to how we started this conversation, talking about fixing deadweight losses, So that's my perspective on that, Capitalism has been the force, that has really helped to provide incentives to drive the economy and increase the size of the pie. There are ups and downs and issues, but it is what it is.